After this numerical analysis of AMD, I'm going to show you how ridiculously overvalued this company is and why it's a bad investment. So, first of all, I'm going to be using stockanalysis.com to try to figure out what is going on with the numbers and then do a little bit of a analysis to just paint a picture of what it's going to take for this company to return the money back to your portfolio. Now, as usual, I like to start at this overview page. First things that you'll notice is these clips right here. A PE ratio of 600. Price to earnings ratio of 600. I know. It's a growth company. But I want to talk about that for a little bit. And then a forward PE of 18. Where the hell they're getting a forward PE of 18? I really don't know. A forward PE of 18 at a 200 billion market cap company, right? That basically implies, what is it? Divided by 20, so that's $10 billion of income. I don't think they've done that ever, and it would take quite a bit for them to achieve that goal. So this is their income for yearly incomes, okay? For the last, 8-9 years, they've averaged about 1 billion per year. The record in 2021 was 3 billion. How are they going to get to 10 billion? And this is in the middle of the crypto boom, right? When everybody was buying computers and there was free money everywhere from the 2020 period, right? The stimmies and everything else. How are these guys going to get 10 billion of income for a forward P of 18? I want to know who's doing these projections. Okay, now let's first of all, AMD. What is this company? This company is basically they have a ton of products. They're a cutting edge company. Let's actually go here on the profile. You can read a little bit about it. They're a cutting edge company. They provide a ton of products. I'm not going to do an overview of their products. I'm not a product expert, but what I do know is that they're very involved in the cutting edge of computing in all arenas, right? The data centers, the GPUs for the PCs, gaming, everything. So they have a whole host of products. And recently, when I was looking at their assets and liabilities earlier today, I noticed that they have a huge asset injection here, right, in 2022. You see this? So this is because they've made, I looked at the 10 Qs, and it is because they had some acquisitions. So I'm going to zoom this out for all you guys that are PC users. You might be able to read this because it is an HD video, hopefully by the time it uploads. However, if you're on the phone, I apologize. It's going to be really hard to read this. So basically, they have two acquisitions. One of them is Xilinx, if I can pronounce it correctly, for a total of $48.8 billion. So that's a pretty hefty price there to pay for some technology, basically. If you want to read it, FPGAs, adaptive SoC products, and ACAP products. The company allocated a purchase of $27.3 billion, identifying as intangible assets on the balance sheet, and $1.3 billion of net liabilities, which is they inherited some debt from the company as well. Not that much, and it's kind of a low rate, so it's not a big deal. And excess purchase price of $22.8 billion recorded as goodwill. They made another acquisition about the same time. By the way, bad time to make acquisitions. Early 2022, that's right before the whole downturn of the market, especially the NASDAQ happened. So this is really poor timing here. So but maybe perhaps that's when they were making the money and they had the ability. So I can't blame them too much. They also acquired Pensando Systems for next-gen distributed computing. So total purchase consideration of $1.7 billion. So Pensando apparently is leading distributed service platform, that extend the company's ability to offer leadership solutions for cloud, enterprise, and edge customers. So they have an entire host like library of products, which is fine, and that's cool, and they're trying to compete. But the problem is that these guys are competing with NVIDIA, and you guys just saw yesterday. I'm recording this on May 26, 2023. And I personally lost a bunch trying to short the earnings of NVIDIA here a couple of days ago. Lost a lot of money doing that. But anyways, they're doing great. NVIDIA's doing great. And they're definitely advancing, the cutting edge a little bit faster than AMD. And also, it looks like they're making more money too. And they're scaling a bit faster, even without these recent acquisitions that AMD's been making. So... But the core of the argument is this, all right? I'm going to just quickly browse through the figures because I want to get to the core of the argument. But before I can do that, though, I have to make sure that I can show you, I paint a little bit of a picture as to what is going on here, all right? So you can get an idea of what I'm talking about. So first, annual revenue. Okay, let me see how it's looking on your screen. You should be able to see it pretty well. Annual revenue, okay, increasing, fine. That's fine. 23 billion. Quarterly, for more definition, it looks like there's going to be a little bit of a dip here in the last 3 quarters. But now, following the guidance of NVIDIA, that's probably going to be going up. Perhaps they didn't acquire a client like NVIDIA did, a large one. So they may not be going up on revenue as fast as NVIDIA. But even if they were, this is pretty small figures for a $200 billion market cap company. So that's averaging about 20 billion per year, puts it at 10 PS ratio, price to sales ratio. So that's not terrific. It is a growth company, okay? Yes, I know. Look, the revenue is going up, and everybody knows that, and they're battling for cutting edge and all that. But I still haven't made the core of the argument. So this is the net income. They're averaging about, like I mentioned, $1 billion per year, including these years here from 2013 and 12 to 2022. Which puts it at about 50. What is it? 50 PE, something like that. On average, if you consider today's market cap. Shares diluted. Obviously, they issued some shares to pay for their acquisitions, to help pay for the acquisitions. Free cash flow per share is obviously a disaster. Now, here's what I'm saying. Okay. Here's what the core of the argument is. So first of all, they have about 3 billion in cash. They can use that however they want. I mean, definitely the company's got tons of survivability. It's very highly priced. It's not a problem for it to survive. It's going to survive for many years to come, and it's going to keep competing, and that's fine. Equity holders love it. They like that they're pushing the envelope, etc. But here's the thing. They haven't really made any substantial money in a very, very, very long time. The company's been founded like 50 years ago. And, I don't think they've ever paid a dividend. Let me see if there's any dividend history here. No dividend history, which is fine. You want them to concentrate on competing. But that's the problem with companies like this, right? They throw everything and the kitchen sink. This is the core of the argument, right? They throw everything, including the kitchen sink, at the company. They'll take on more debt. They'll acquire companies. They'll throw money on talent. They'll give them stock, purchase, stock compensation and everything. They'll do everything they can to stay on top and to keep catching up with NVIDIA and it's fierce competition, and they want to be ahead in this and that and offer this and that product and cut closer to steal market share and get more clients and sell more and try to steal market share by cutting the margins, etc. By the way, speaking of margins, look at what's going on here. So we'll go to financials. Let me show you my screen. And these are the margins here. Look, 44.93 gross margin, fine, but by the time we just get to operating margin, it's already down to 5.36%. I'm not going to count 2021. 5-10% at the best. And there's many years where it's been negative, right? So 5-10% margin, and that's just operating margin, not even profit margin. Okay? So the company, struggles to turn profits, which is not their goal, right? Profits are actually not their goal right now. They're hoping to get to a spot in the future where their revenue and is going to be secure enough, their market share is going to be secure enough to where they can start turning off profits and maybe distributing some of that in the form of stock repurchases or spinning them off in dividends or whatever they're planning on doing to return some of this capital to shareholders. But as of right now, that's not their priority. And the problem is, how long has it been for this company for not to have that as a priority? Like, how many decades does a company need in order to start, turning into, okay, now we're ready to distribute some of the profits to shareholders? Like, how long are you going to be in this growth period? And it's specifically more sensitive of a subject now because it's a high rate environment, right? Interest rate, it's paying you 5% just to sit in cash in your brokerage account. And I'm not just talking, individual investors, like institutional investors have that choice too. Everybody has that choice. And they're going to take a look twice at this company. It's like, oh my goodness, this company's history, right? And I don't buy that whole like AI, okay, here it is, 3D printing AI, like fad, or I'm going to call it a fad. And I know this is going to turn off a lot of people, but the thing is, technology has been going. It's been improving ever since the company has been founded, right? This company's seen the internet boom. It's seen like the social media boom. It's seen the crypto boom. Like, they've had plenty of booms, and now this AI boom is not going to be any different. So what makes us believe that the AI boom is going to be the one that actually turns on the profit spigots? Why are they going to be able to out AI Nvidia or other companies that are investing heavily into it, probably have even better talent, when it comes to all that stuff? And there's going to be competition for all the people who can do it, who are on the cutting edge. What makes you think that AMD is going to be securing those people? I can't see the argument for them to be having an edge, right? An edge meaning like something that they do better than anybody else out there, and sustaining that edge for a long period of time without somebody else catching up. Not only that, but look at all the big companies that are starting to invest in their own chip making, in their own technologies, because they want to integrate in themselves, so they don't want to be dependent on third parties, like Apple, for example. Right? They're making their own chips for their own products. They're trying to decrease reliance on third parties. And not only that, but companies like, I think, Facebook, Microsoft, right? They're looking into hardware. Google, they experiment with hardware all the time, and they have resources, and they have the pockets in order to be able to afford it. So it's not just competing with Nvidia like it used to be a long time ago. A competition, might I add, that they've been losing steadily, at least when it comes to like profitability standpoint and efficiency of production standpoint. Even though AMD, I remember, has had the cutting edge advantage for short bursts of time, it's been a fierce competition, and it's left dead bodies along the way. Like, it's not just been a spring garden full of colorful flowers, that both NVIDIA and AMD can pick from and have this duopoly where they can squeeze, the consumer out of all their hard-earned wages or capital. It's been ugly. It's been a bloody battle. Okay? It's not like holding hands and let's make money together kind of thing. It's not. So I can't really see it. 500 PE, 18 PE forward looking, no way. I can't see it happening. Because even if there is some kind of thing, let's say, okay, we're going to do 10 billion a year now for the next year. in earnings, that's gonna dwindle. As soon as there's some kind of money in this high tech arena, everybody and their mother, Nvidia and Nvidia's mom, are gonna go after those profits. You think they're just gonna leave money on the table like this and let AMD have it? No. And all the big companies are gonna want to bite out of it. Like, have you taken a look of how many AI companies there are? Like right now, if you don't mention AI at least 50 times in your earnings call, you're fired. Right? You're going to be looking for a job at McDonald's unless you start spamming those letters out there. Right? So this is one of the reasons this is the main reason, the main argument why I think that AMD is a bad investment. All right? You can trade it. It's liquid. People love to trade it up and down, short it, buy puts, buy calls, whatever. But I can't see them actually being an investment, right? Where it returns capital to shareholders at this valuation, even like 20 years from now. How long are you going to wait? Another 50 years to see some money back from AMD? Maybe if... This is what I say to all these companies that are just like AMD. Like the, all the Halo companies, basically. It's like, if you want to be part of history and you say that you've owned that stock or you believe in the greater fool theory, then yes, fine, go ahead and buy as much as you want. But if you actually want an actual investment where it returns capital to shareholders, which is the reason why people should be investing in the first place, and not some like ego trip, like pat myself on the back type of investment style where you just want to be part of history and push the agenda, and I don't know, play the game, or you're just a competitive type of person. Like, it just depends on the motive as to why you're putting money in there. So I would personally take a look at myself in the mirror, figure out why I'm investing in this company or why I'm putting the money into this company to begin with, and then the answers are going to spit out very easily from there. For me personally, it's a definite no, but you might come up with a different answer. And I'm not going to tell anyone how to, invest their money. I just wouldn't put any money to work myself. So, that's my conclusion there. Like it, hate it. That's what I got. All right. That was my piece. Mic drop. Oh, I forgot to turn off. I don't do edits. No edits.